You were listening to chartingwealth.com for Monday, the 27th of June, 2016. Let's jump right into what's going on since the Brexit took place. Exciting. Do you all recall what we said at the end of this past week, the beginning of this week, with the weekly review and forecast? We told you to watch for the Brexit. If you remember the podcast from Friday, for Friday that we recorded Thursday before the results came in, that we talked about previously in the week, what do you do when big events like this are going on, are about to occur, and you do not know the result? Well, if you'd have been on the wrong side of this, you would have gotten crushed. What do? Well, if you're a sophisticated trader, you can insure yourself with puts or calls. But if you're just a little guy just starting to learn, you get out of the market. Now, people say, wait a minute, if I'd been in and shorted the market, I'd have made a fortune. Yeah, but what was everybody calling it? They were saying the opposite. Can you take risks like that and gamble? Sure, if you're a gambler, but chances are you are going to lose, and you're going to lose big. So what do? You either insure yourself or you get out. Now, what was the market telling us was going to happen? Well, if we look at our 2-day chart, which is where we start, what do you see? The market turned over going down back on the 15th, and it never reversed itself. It continued to move down. We continued to see down movement. We continued to call the total market down. Did the market really know what was going to happen? Not necessarily, but the movement continued at the same pace that the market was in already. It went down. We did have a 2-day up candle on the 21st, but not nearly enough movement to cross over going up. We even had a spinning top showing lots of indecision, which is exactly what was going on the 23rd. That is the day of the vote that didn't come in until way after dark, after the markets had closed in the U.S., and then a huge down movement. Actually, the total market down 3.23%. So the market did what the charts were showing. Isn't that amazing? Okay, let's talk about what happened on the 4-hour chart. We saw huge down movement in the morning, and then basically the same during the afternoon. So what did we have go on again? We had a loss for the day of 3.23% across the market. We had that. Remember how we had waited and seen the pullback occur on the 21st? And any number of you could have gotten in on the green candles if you had so desired. Some of you did, maybe on the red candle that we saw on the afternoon of the 22nd. And again, we don't mean you got in on the green candles. You saw the green candles reverse, then you jumped back in. Now, you may have panicked when you saw more up movement on the 23rd before the big dump. But again, the safest bet, of course, wait for the pullback and then wait for the reversal. The problem is, on a drop like we saw of historic proportions with this kind of move in the Brexit, the drop that you saw occur would have been a very hard one to get into. In fact, you could have bought at the very bottom, and you would actually, with all the down movement, you would be down even further. So again, best advice, don't be in the market when crazy things are happening. Wait for it to get sorted out. Yes, you can bet, but chances are you'll bet wrong. And if you do bet wrong, you will get hammered unless you insure yourself with puts or calls. Calls if the market's going down, puts if the market's going up. Again, just to protect yourself. So, and depending on your position, we'll teach more about that later for those that are interested. If you are interested, I need to hear from you, because it's not something I typically cover, because events like this don't happen all the time. And the best and easiest thing to do is to get out. Okay, let's continue to move. So we do have that pullback has occurred. The markets continue to go in the direction of the 2-day chart. Let's go to the S&P 500. That is represented by SPY. It was down 3.60%, even more than the total market at 3.23%. Again, the market was already in a down position. We had had two 2-day candles of some up movement, but it had not crossed over going up at that point and then turned down strong with both wicks on the top and the bottom of the red candle. If we take a look at the 4-hour chart, what do we see going on? Again, very similar to the total market. We see that crossover taking place in the afternoon, and we see big movement down in the morning and the afternoon. The derivative oscillators also rotated over. Now you might say, do I jump in right now? No. Who knows what's going to happen on Monday? You're going to wait and see if there is a potential, maybe a green candle pullback, that then another red downturn that might let you get in, or you might just let the market sort itself out, okay? We have to be smart about this stuff. We're not into taking risks and getting hammered. All right, let's go to the Qs. That was the biggest down move. The only thing that was as big a change was gold. Gold actually went up. So let's talk about what's going on with the Qs, the NASDAQ 100. We have a strong down candle, down 4.06%. We were again in a down move. Derivative oscillator and the MACD had crossed over around the 15th for the MACD, the 17th on the 2-day candle for the derivative oscillator, and we continue to see huge down movement. No up wick, unlike the S&P 500. The Qs were just down. All right, if we look at what happened on the 4-hour chart, it's going to, of course, look similar. We saw those upticks as the market was what we call backing up starting on the 22nd, and then rolled over hard, crossed over in the morning, going down. Derivative oscillator still hasn't crossed over, even in the afternoon on the Qs with all that down movement. I would expect that to be happening probably Monday. All right, that's where we are on the Qs. That's where we are on the NASDAQ 100, the S&P 500, and the total market. Lastly, let's take a look at gold. What has gold done? First, we'll look at the 2-day chart. Gold was already in an up move. If you remember, we refused to call it in a down move yesterday, said it was looking close to that. And again, if the Brexit had failed, we'd probably see all this moving in the opposite direction. If the Brits were staying in, then it would probably have just boomed. In fact, remember how people talked yesterday? It doesn't look like it's going to pass. The markets are booming. Well, the markets were wrong, but the charts weren't. Isn't that interesting? There wasn't enough up movement to turn our charts around, and to make gold go down. So gold moved back up significantly, although the derivative oscillator didn't gain all that much, even with that huge spike up in gold. Again, gold up 4.87% in one day. All right, if we look at from the 2-day chart to the 4-hour chart, what do we see? We saw gold had a huge spike up in the morning, and then a red open box candle in the afternoon. So a bit of a pullback in the afternoon. Gold still with that crossover going up. Still the derivative oscillator has not flipped over. The MACD did flip over in the afternoon. That is where we ended the markets on Friday, the 24th, as we go into Monday, the 27th. I encourage you to continue to keep up with us. Let's see how this settles out. For those of you who were following your charts and had gotten in and really did well on these moves using just your Hinkin-Ashi candlesticks as your triggers, good on you. Again, a lot of risk you were taking there, but if you're trusting in your charts, again, I don't recommend that. Recommend that you get out and be careful. But those of you who did, the charts did not fail you this time, regardless of what the talking heads were saying on TV. Again, what do we talk about over and over and over? You follow the charts, not the media noise. You don't let the talking heads tell you what the market's doing. You watch the market and let the charts tell you what the market's doing. Thank you so much for listening to us. We love to hear from you here at Charting Wealth. If you don't already have our newsletter coming to you every day, all you have to do is go to the website, sign up. We will send you with those charts every day the link to our How to Read a Stock Chart video, along with our layout from stockcharts.com via freestockcharts.com. And what will happen at freestockcharts.com, if you go there, sign up for an account for free, and then you load up the link that we send you, you will end up being able to have our layout load up for you. You can save that, and you can use that to follow along with us every day as you experiment, practice, get better. Again, if you haven't already opened up a virtual trading account in the online brokers, you need to do that. And we want you to train with us every single day. It costs you 10 minutes of your time. It's the best 10 minutes you're going to spend if you want to see your wealth grow in the future once you get good at this and can make your own decisions. Remember, we're not a stock calling service. We're an education firm. We're here for you. We want to hear from you. Follow us on Facebook, Twitter, Instagram, YouTube. If you care about what we do, go to iTunes, sign up, subscribe to us, give us a 5-star rating, and also on YouTube, subscribe. When we hit that 1,000 mark of subscribers, we're getting there. We have tens of thousands listen to us every week, but we want to get to that 1,000 hardcore subscribers. When we do that, guess what happens? We're able to do proprietary broadcasts just for you. Thanks so much for listening. Again, let us hear from you at chartingwealth.com.